In today's video, I will talk a little bit about lines. I'm not even going to talk about the Andrews pitchfork so much. I'm just going to talk about simple lines that connect highs and lows in the chart and how they can be extremely powerful in certain situations. In this first moment, we can see that price has made a higher high and has been producing higher lows as well. From that fact alone, we can state that buyers have more power than the sellers at this moment, even though that can change very quickly. However, higher highs and higher lows are being formed in the major flow of the market, but if we look closer a little bit, we'll see that the minor flow is starting to form lower highs and lower lows. That's the notion that tells us that sellers have more power than the buyers. So we have this paradoxical situation where the major flow is composed of buyers who are proving their ground, and at the same time the minor flow is composed of sellers who are proving their ground. At some point, these two groups are going to meet each other, and by definition, only one of them can win the fight. It's at this point that we can begin the line work to investigate where this fight between buyers and sellers will happen, which is analogous to a reversal point in the market. The most evident line you can draw is connecting the higher lows produced by the buyers in the major flow. It's important that you understand how to draw these lines correctly because slight changes in their angles can produce wrong results. There is a specific way to draw these lines in a way that they catch and hug all the relevant candle wicks associated with the market extremes we want to use. We can do the same thing trying to catch the lower highs produced by sellers in the minor flow. Notice that the line associated with the buyers has an upward slope, and the line associated with the sellers has a downward slope. There are more lines we can draw in this chart with the goal of finding points where different lines intersect, especially if they are lines with opposing angles. Another simple line that can be drawn here is the inward frequency coming out of the confirmed demand zone. We can also extrapolate the line of sellers to a context created by buyers. In other words, we can extrapolate the line fundamentally created by sellers to a market extreme created by buyers. That's one of the many ways to find different lines and angles that might be helpful. At this point, you can notice that something interesting arises in the chart, which is an area where three different lines meet and form a small triangle. This is an area in the chart that three different lines with different fundamentals are meeting, so it's definitely an area to watch out. Let's advance price to see what happens. Here we can see a series of interesting developments in this market. First, notice how price reverses as soon as it enters the small triangle area. Second, notice how the downsloping line of sellers predicts another small high in a minor flow before price dives down to the small triangle area. Using the new price information, there are several other lines we can draw in this chart. Let's begin by updating the upsloping line of buyers that we already have, and extrapolate it to the last major high, creating a projection to the upside since buyers won the battle against the sellers in the small triangle area. Notice also that price has overshot the primary upsloping line of buyers, so we are going to create a mirror image of that overshoot on the upside as well. Now we can update the lines that relate to the sellers. We can move the previous extrapolated line from before to the confirmed low now. That will create a distance between the downsloping lines which can be extrapolated upwards equidistantly. We can also use a pitchfork to try catching the very next pullback, assuming that the next significant low has just formed. So it will be a pitchfork grounded on the previous confirmed major low, the last major high, and the probable new major low after the small triangle. By drawing the pitchfork, we can see that there is a point high in the chart where several lines intersect. In fact, there is a point where three of them intersect precisely in the same point. Let's advance price to see what happens. As you can see here, the moment price hits the multiple intersection of these simple lines, it reverses immediately. As far as precision in trading goes, there's not much room for improvement, as you can probably tell. However, understanding how to draw and use these lines is not a simple thing to do. It's a process that involves serious study and dedication. Speaking of study and dedication, I would also like to give you a feedback about the creation of the institutional trading material. I already finished the book reviewing linear algebra, and I'm currently halfway the book reviewing Calculus 1. In a matter of 4 months or so, I will have finished Calculus 1, 2, and 3, Statistics and Probability, and then the real fun begins with the review of the most important econometric models, stochastic calculus, and the institutional methods per se. If you wish to learn how to trade using the lines you saw in this video, check out my courses in the video description. If you wish to support the channel, please click the like button, subscribe to the channel, and leave your comment below. Thank you for watching and take care.